Good morning, everyone, and welcome to the DecisionPoint Trading Room. I am your host, Erin Swenlin, and I am here with my father, Carl Swenlin, and we're going to get you ready for the week. I have some great information today. I'm going to be looking at some charts that stocks that are reporting earnings. Carl's going to go through some monthly charts and talk about those. I would like to let you know that if you want to put in a symbol request, that you just put that in the Q&A box. Your questions are especially welcome, so put those in there. We do have a chat room moderator, so go in the chat room, say hello to your fellow traders, see what's on their minds. We usually get a lot of action in there on Fridays. And finally, if you'd like to join us live, there is a link at the bottom of the YouTube video if you happen to be watching it on YouTube. And just click on that link and register. You'll get information on how to log in and be here live and get your symbol requests looked at. All right, without further ado, I'm going to pass it to you. Dad, what do you got?
Okay, I want to start out with monthly chart analysis. We all start with the daily, I think, or maybe even shorter term, but I always like to look at the 1 year daily bar chart. Walgreens is one that was pointed out, is currently yielding 9%, which is pretty good. However, you look over here at the, I got to get my pointer started here. Forgot about that. I look at the PE and EPS, they're minus numbers. So it's not, Walgreens is not profitable at this point. Now, sometimes that doesn't matter because some companies want to continue their dividend even through bumps, and they have cash reserves that allow them to do that. I don't know if that's the case with Walgreens, but something to consider. This is one that you might want to take a closer look at. Not a recommendation, just help develop an understanding of basic time frames. Let's move up to the weekly chart, and we're looking at, you notice that they've got a steady stream of dividends and increasing. And however, it's trending downward up from the upper left to the lower right. And the weekly PMO is negative and dropping, falling. Let me just go back briefly and look at the daily PMO, turning up at this point. So there is a possibility for a short-term entry. Moving, let's go to the monthly chart. Now you have really great context. You see, it's dropping into this historical range, which it maintained until this breakout in 2013, we'll say, and had a major topping action, and it is in massive decline from about 75. Currently, it's 16. Monthly PMO is below zero and falling, so there's no positive energy in this at all. This is I have set for 25 years, but let's move it out to 35 to see if we get any more. Yes, now okay, we can see this range was maintained for quite some time, and it's back dropping through the middle of that range. And I would say that a good place to look for it finding a bottom would be right here. Beyond that, you've got quite a ways to drop before it gets down. We're looking below $5 as a area of support if it drops below this. Another, an ETF, somebody mentioned uranium. URA is the symbol for the ETF. it's taking off. If you look at the PMO, everything's positive on this chart. Nothing to complain about at all. Let's go to the weekly. Yes, we've got here's a significant low. And from that point, that was in 2020. Hard to believe, huh? Around $6.50. And it's currently at 28. Moving on to the monthly chart. Okay, it's been way higher than it is now. So you've got a good potential range here, and it's just starting up. PMO, monthly PMO is turned up, and it's above the zero line, well above the zero line. Let me drop back to the weekly. That PMO is rising above the zero line as well. So not a recommendation, just to make a point. Always look at the monthly chart. Even if you're trading in the short term, look at what the long-term pressures might be on the stock when you're trading it. Okay, I will drop out of that, and let's go to the market. We've got SPY here. Right now, the market's about flat to a little positive. And today, the PMO, I'm sorry, the 20 EMA is dropped below the 50 EMA, and I'm not sure it's going to be like that. There's only 1 point difference there, it looks like, but it may not be that at the close, but right now, that's what I'm counting on it doing. And let's go and look at the weekly and monthly charts, which I haven't done in the past, which I'm going to start doing. Notice that the weekly PMO has topped, and it has crossed through the signal line. That's not a very positive picture. The monthly chart. This is not final until the end of the month, but right now we've got a monthly PMO top below the signal line, very negative action. This is a rising trend line, which may be able to stop the decline if it continues. That's what I'm counting on at this point, is that it's going to move back at least to this rising trend line. Looking at some of the indicators, this is our bias chart. What we're looking for in this chart to see what is the bias of the S&P 500 based on the position of the Silver Cross and Golden Cross indexes relative to their signal lines. Right now, the bias is negative in both cases. These readings are as of Friday. This is an end-of-day indicator, but notice that they're both falling. The Silver Cross is indicates the percent of the stocks in the S&P 500. In this case, that has the 20 EMA above the 50-day EMA. The Golden Cross Index tracks the percentage of stocks with the Golden Cross, which means the 50 EMA is above the 200-day EMA. Right now, we've got a bear market reading. Notice how we went from above 80 in the end of July to right now 37. If you're rounding up on that, that's quite a drop, and a lot of juice leaving the market. Not too much in the way of price decline yet. And that's because unfortunately, you have the large cap stocks which support the index, even when the majority of the stocks are in the tank. The Golden Cross Index is still at 60%, which is bull market territory in the long term, but again, deteriorating. Looks like the best we can look for, though, we should, if the percentage of stocks above the 50 and above their 200, they are both, let's see, that's 23 and 42. So the Golden Cross can drop at this point to 42%. So that's where it's headed at this point, unless we get a major shift in energy in the market. The Silver Cross Index 20 is headed for 23%, which is about 12, 13 points below where it is now. And let's see, we've got the ITBM and ITVM with the short term as Swenlin trading oscillators for breadth and volume. These dotted lines show the normal range, and then basically the STOs are approaching the limit of their normal range, but it can go below, well below, as you can see at this end here. The intermediate term indicators, they're still, they're not as bad as they were in August. They're headed down. We don't have a bottom yet, so we don't know if it's finished. But notice we have a lower price low here, and yet we have higher lows on these indicators. All the indicators have these positive divergences except for the STOV. All right, let me look at let's see, I need to change the share to that didn't work, did it?
Yep, we got your bias assessment chart table.
Okay, that's not the one I wanted, but
there we are.
Good.
That one's all right.
Okay, let's see it. All right, right now this is showing the trend model buy, sell, and neutral signals for the intermediate term. This is when the 20 crosses above the 50, and here's the long-term trend model, which is when the 50 EMA crosses up through the 200-day EMA. Notice that we've got a lot of deterioration, primarily in the sector and industry group areas. The main indexes were still holding on because they're so dominated by large cap stocks. However, at this today, I'm looking at SPY and the NASDAQ and the NASDAQ composite, NASDAQ 100 and NASDAQ composite changing to neutral. Okay, let's go and look at the bias chart. This shows where the Golden Cross and Silver Cross indexes right now. This is Silver Cross. That's when it's below its signal line. And when it's below, it's a bearish bias. When it's above, it's bullish. Notice that there are only two, utilities and gold miners, that are with a bullish bias right now. The Golden Cross bias is when the Golden Cross Index is above its 20 EMA for bullish. Right now, it's mostly bearish all over the place. Energy and financials, real estate and utilities, only good picture there. Let me go back to our charts. Didn't work, did it?
I'm seeing both.
There, we'll try that. There we go.
There we go.
Okay, looking at the dollar index. The index is in a rising trend right now from the July low, and currently it's at 0.37% higher than the close on Friday. Let's just look at a longer term chart on this. Let's look at the weekly. You can see that basically this is a positive chart. We've got the saucer cup here. We haven't got a handle yet, so possibly we're going to still see some pullback with a handle, but right now it's the dollar index is doing pretty well. With that in view, we would expect gold to be doing worse, and it is actually. It's minus 0.46% for the day, so it's actually going down faster than the dollar is going up. This is our relative strength for the dollar versus gold, and gold is been weak since mid-July in regards to gold. Let's just go ahead and let's look at the monthly on this. Okay, previous all-time high in 2011, and now this is the latest. The most recent new all-time high was in 2020, and we've challenged it 2 other times at that level. So maybe the 4th time will be charmed if it does start back up again. Right now it's not looking red hot, and the monthly PMO is falling. Crude oil in a nice rising trend from the June low, and let's go ahead and look at some longer term charts. Yeah, we keep this one chart with it compared to West Texas Intermediate crude, which is as of Friday was $90, and I think it's down slightly today, but crude oil is looking positive at this point. Here's the PMO in a rising configuration above the 0 line. T-bonds, this is the TLT ETF, and you can see that's in a declining trend. Let's go out to a little longer. Let's go weekly. That should do it. Right. It's been in a declining trend since the beginning of 2020. Right now, we're getting a double bottom. Maybe we'll see it move into a trading range, but it's the PMO, the weekly PMO is below 0 and falling. The 10-year T-bond yield, which people like to look at, and it's in a rising trend. And again, that is possibly, we've got this cup and possibly going to see a handle on that because there really wasn't much of one at this point. This is the yield array chart as of Friday, and we can see the shorter durations are in a rising trends. I'm sorry, the longer durations are in a rising trend. Shorter durations are flattening out here. Bitcoin not having a great day, and it's falling since this most recent top. I think I'll probably have to adjust this trading range to go across this top. Let's look at a longer term chart again. Right here it seems like the longer term trading range, and you can see there's a lot of congestion in that area to keep it below this the top of that range. Let's look at our big tech stocks. Apple rising today above 1%. And basically, we have a descending triangle here, which is expected to break to the downside. Amazon basically breaking down out of this rising wedge formation, which is we would expect it most of the time to do that. It's up today, but was still in this island congestion right here. Possibly we're going to see an island reversal. But right now, we consider it in a downtrend. Google up slightly, rising wedge, breakdown. Again, we don't know if that's going to be the extent of it, whether it's going to continue longer, but this is a gap down and a negative configuration right now. Meta, not so sure we got a descending triangle yet, but we do have a declining tops line. So we would be looking for a new downtrend to be established if we get a low below this area here. Microsoft, again, a declining tops, top beneath the top. We need to get a bottom beneath this bottom to establish a falling trend. Netflix has broken down below its previous bottom, and so we do have a declining trend for Netflix. But notice we've got a rising trend line here, which may be able to stop the decline. NVIDIA, same kind of trend, rising trend line. Actually, I need to tuck that up a little. So this cluster is below that line if the line was drawn more accurately. Again, NVIDIA, here's horizontal support, which we'll look for that to hold at this time. And Tesla, it's up right now. It was down earlier, as were all these stocks except Apple. And again, it's coming up to a rising trend line, but we have a top beneath the top. So we need to break below this bottom in order to establish a downtrend. And I think I haven't missed anything, have I?
I don't think you did. That was pretty good. We've got a pretty good sense of what's going on in the market, as well as some of those major asset classes. And of course, the Magnificent Seven, it's always important to know what's going on in that area. I do like Netflix. I have to say that looks pretty interesting, hitting those levels of support. But the market overall is pretty weak, I would say.
Okay.
All right, so let's go ahead and shift gears. I'm going to go ahead and talk a little bit about what's going on with the sectors. And I would say nothing good is going on with the sectors. Normally, I look and we dive into a sector and some industry groups, but honestly, there really isn't any great strength out there when we look at the sectors. If you look at the PMO, the price momentum oscillator, on all of these sector charts, you can see that the PMO is in decline on every single one of them. Utilities was making a nice move. You can see that it's really started to fail. Look at consumer staples, the other defensive area of the market. It's lost some very strong support, which is not good. And the PMO topped well beneath the zero line. So, usually we look for these defensive areas to do well when the market gets weak, but they're even doing poorly, and in fact doing even more poorly than the rest of the market. So that's not a good sign. Technology, I think, is interesting simply because it is getting ready to hit this level of support. It's a very strong level of support. So I think we'll go ahead and look at the inside of technology. Real estate looks interesting to me as well because it is hitting this level of major support. So let's go ahead and go into these two sectors. Let me get to my better chart list. So let's look at real estate really quickly here. Excuse me. So you can see price is now getting down to some very strong support. Now, the strongest support really does lie at $32 at this low, but this has quite a few touches here, and it's looking pretty interesting as a support level for real estate. But when you go under the hood, we're not seeing anything that could really spur price to move higher. We don't have any stocks with price above their 20-day EMA. We have very few above their 50-day EMA and 200-day EMAs. Stochastics are below 20. I mean, there's nothing really good here, nothing that tells me that we're going to get that reversal. But as price does, eventually it's got to turn up, and this does look like an interesting area to start looking for a bottom. But right now, it's nothing here on the chart to tell me that we have a bottom on the way. But I just wanted to point it out because that is a pretty strong level of support. And the last time something like this happened, it was utilities. And I had noted back down here that utilities, while they still looked very negative, were at very strong support. And it did break below that, but then it got back up. Now we're testing that level one more time. So utilities could see a little bit of a turn to the upside. But look at the participation, how it has just flown out of utilities. Again, there is some support in here as far as stocks. About a third of them are above their 20-day EMA. But seeing this drop in participation, the Silver Cross is very low reading, still above its signal line, but this is not it's showing a lot of weakness, but it is also near some strong support. I mean, the market overall has just gotten very extended to the downside. We really should start looking for a little bit of a bounce. The question will be whether that bounce can turn into a rally. And right now, when you look at all of the sectors, it's hard to imagine it turning into a good size rally. More than likely, we're going to be looking at a relief or a dead cat bounce, if you will. So technology hitting a very strong level of support right now. It did drop below its intermediate term rising trend, though, which is a bit of a problem. When we looked at all those Magnificent Seven charts, a lot of them looked exactly like this. Not a surprise. They're the mega caps. They are the ones that drive this particular sector, most of them. So they should look pretty similar. But I see a double top. I see a rounded top. This just doesn't look good for the intermediate term, but in the short term, we are hitting some interesting support. We don't really have a lot of participation under the surface to really give us that reversal right now. But like I said, we have to start looking for areas where we might get a little bit of a bounce, a little bit of a relief rally. And I think those three sectors look rather interesting right now on a little bit of a bounce. So I'm not feeling good about the overall market. I'm not feeling like these sectors, even if they bounce off these support levels, are going to do a whole lot. But it is just food for thought. All right. So yes.
The real estate sector intrigues me, and I don't think you can do it now, but maybe next week we can take a look at what stocks are in that sector, because I think it's mostly REITs, but I haven't actually looked, and it's not the easiest thing to do for me anyway, to find this stuff. But let's try to do that for next week.
I'm going to write my notes to do that indeed. Yeah, right now it's pretty interesting to see when you hit that level of support on this kind of a chart. It does make you really think twice. Now, granted, normally this isn't something I would be really interested in because it's in a trading range. But you know what? If you've got a stock or a sector in a trading range and it's at the bottom of that range, well, maybe not a bad time to get in and ride it to the top of that range that's been pretty much set all this year. So I think
what does the weekly look like?
Let's look at that weekly. We've been talking about using weekly and monthly charts, so let's do that. All right, so there's a weekly chart of real estate, and we do see that the PMO is on the weekly PMO is on a sell signal. It did top beneath the zero line, so it does show that there is some weakness here. RSI negative as well. But again, what makes it so intriguing, I think, is the fact that it is sitting on this level of support. And if we look at the monthly, why not?
Why not?
Well, monthly PMO is about as oversold as it can get right now, but it hasn't really started to decelerate in any way, shape, or form.
It's still above the zero line.
Yeah, and it is above the zero line. That's a good point. So, when we put all of the picture together with the daily, the weekly, and the monthly, the daily charts looks intriguing. The weekly chart, well, we've got some problems. The PMO is just now giving us a crossover sell signal. And the monthly chart, PMO is positive, but still in decline. So that tells me that my time frame for this particular investment, should I invest in XLRE, is short term, because intermediate and long terms are still not really gelling. So that's kind of how I use the weekly and monthlies. It gives me an idea of, okay, what is my time horizon? What time horizon could I have on this investment? Could it be a longer term investment or not? XLRE, I would say short term. All right, I have just a few stocks I wanted to point out today that are getting ready to report earnings this week. I'm not going to go through all of them because obviously we'd be here till forever. But let's look at Costco. Costco reports on Tuesday. And at this point, I'm not really thrilled with the look of the chart. Part of the problem is relative strength is fading for this industry group, the personal products area. This is in staples. We looked at consumer staples. That looks really weak. The PMO in decline. But if I'm going to go in this area, I do want to find something with rising relative strength against its group, particularly given the group isn't doing well. And overall, this stock, Costco, is doing well relatively to the market. Now, one thing that I would bring up is that it is getting ready to report tomorrow. Personally, I do not like to hold through earnings. You can get a surprise in either direction. Even if the results are good, you can get a decline. If they're bad, you can still get things to rise, but you're really just putting yourself in a bad position.
Got a double top there, July, August, which executed, and now we've got a triple top too.
Yes. So the bias on this chart doesn't look that great as far as going into earnings. I'm not really thrilled with the chart. Another one reporting earnings tomorrow is CTAS, Cintas Corp. Another one, PMO is in decline, getting ready to give us a sell signal. This isn't a good setup prior to earnings, but I do notice they have been picking up their dividends from $1.15 now, $1.35. So, yield's pretty good, but not great. Another one getting ready to report. Let's see, on Wednesday, we have Micron. And Micron triple top pretty much forming here. PMO sell signal. Earnings not looking so hot here going into earnings, I would say, with that triple top. Semiconductors are really struggling right now. Paychex also reporting on Wednesday. This is an ugly chart. Nothing good about this. I'm guessing that their earnings probably won't be coming through the way they wanted to, but I do notice the dividends are a little bit higher than they were back in last February. Let's see, Nike is going to report on Thursday. And you can see that it is in free fall at this point. I think we can look at a weekly chart and get a sense of where's the support level? And we're really not looking at its support level until we get to $80 here for Nike. I don't like the look of this. It'll be really interesting to see how earnings shape up based on this pretty ugly chart. Still paying a decent yield dividend. And let's see who else is reporting. Carnival Cruise Lines is going to report on Friday. Another pretty ugly chart, just like Nike, maybe not as bad as Nike, but certainly in a big decline. And we are losing support at that 200-day EMA. That tells me we're going to see even lower prices. Maybe some of these charts, like I said, I don't like to hold through earnings, but maybe they might be worthwhile to maybe put a put on if things are going to look as negative as they look on these charts. All right, so that pretty much covers the earnings spotlight, if you will. Now it's time to go ahead and get into your symbol requests. We will look at the daily charts. I will explain a little bit more about what's on the daily chart, and then we will get into 5-minute candlestick charts for trading. And of course, we don't want to forget the weekly and the monthly charts.
Okay, we have a question here. How is the SPY on a buy on your decision point on the table that I showed earlier, and yet the 20 is below the 50, which that's the reason is because we update those tables at the end of the day, and as of Friday, the 20 was above the 50, and we don't know if that's going to be the case, how it will close today. We shall see, but that's why.
Mm-hmm.
Okay, our first symbol SDOW.
SDOW.
That's a short, isn't it?
Yep, it's the short of the Dow 30. And let's see, the question I see in here, where do you think the stop should be? Let's get my inspect tool going here, so that will help me a great deal. Looks pretty good. Like I said, I think that we are getting ready to experience maybe a little bit of a bounce right now in the market. It got really extended to the downside, kind of time for that. I don't know that it's going to necessarily stop you out of this position. Let's see here.
And he wants to know what the stop would be.
Yeah. So I would be looking at the 50-day EMA would be probably where I would want to go. And that's at about 6.25%. Now, this is an ultra short, so you do have to be, ready to have a deeper stop if you wanted to have one. Because if you're going twice as much, right? So you need to double your stop, just like you're doubling your upside target because it's an ultra, which means you could even set it much lower at about 10.3% because that's double what what the stop was that I looked at earlier. But I think I would be setting it up right in that 6 range. But that means we're going to get a rally of at least 3% in the Dow to get to that level. I don't know that we'll get that high, so I think that that's probably a decent stop level.
The AAP, he says it is making a dumpling top in an oversold area. That's a new term for me.
Dumpling top. Yeah, I'm not really sure about that. But I'm guessing that's this kind of rounded top here that's going on. I would think that we might be looking at this as a short. I wouldn't be looking at this as a buy at this point. I'm going to move this to a log scale. I'm not a big fan of log scale charts, but I think we need it for this one. I don't like anything going on this chart. I think you're definitely catching that falling knife if you're looking at this on the long side. I don't know that I'd be looking at it on the short side though either, simply because it is so, it's already hit some of these lows. It does look like it might be breaking down from here though too, as I get closer to see it. I'm not a fan of the chart, so I'm going to kind of quit right here.
Okay, FedEx.
Yes, FDX. All right, this looks a little bit better. We've got a nice big bullish engulfing candlestick, gap up. It doesn't look like a breakaway gap to me. This looks more like a possible island reversal formation, just because we got the gap and now we're just kind of consolidating that move to the upside. I think we are vulnerable to a gap down on this one, but I have to say, you know, the way the PMO is setting up a new crossover buy signal, stochastics are rising. We do have good relative strength. And the bullish engulfing candlestick, I think that makes this one interesting. Let's look at a weekly. And I think you can make a case for a bull flag formation maybe here. I don't like the way the weekly PMO is setting up. Actually, right now, it's setting up a crossover sell signal. It is technically below its signal line, but the signal won't go final until after the close on Friday. So things could change. It might avoid that. Still in a nice, strong rising trend. I don't think the weekly chart looks that bad.
Okay. UEC.
All right. Looks like the big giant cup with a tiny little handle, possibly. Possibly a flag formation. Nice little breakout here. It was really overbought. It needed this pullback here. PMO is surging above the signal line, is what we call a bottom above the signal line. Stochastics turning up. Really, really nice relative strength on this one. Good choice on relative strength. I like the look of this one. We can look at a weekly, and then I'm going to go real quick to a 5-minute candlestick so we can see how we can trade using DecisionPoint timing. I think that the weekly chart looks constructive, looks very good. It is a little extended, but not going to see any overhead resistance probably till about this level, another 8% plus before we hit overhead resistance. So that's still got some pretty good upside potential. If we look at the 5-minute candlestick chart, this is where we determine our entries and our exits. I don't use the 5-minute candle to decide if I want a stock. I use the 5-minute candle to get into a stock or to get out. To get in, you want a PMO, 5-minute PMO positive crossover with a positive RSI. When you have those two things put together, you've got a conservative buy point. The sell signal is simply when the PMO turns down. When I'm ready to sell a stock, I just need any excuse. And a PMO, a 5-minute PMO turning down is just the excuse I need. So right now we can see that a buy point is coming in. It's an aggressive buy point currently because we don't have the crossover yet, but certainly at a buy point right now.
EVN.
All right, let's get back into the energy space here. Energy has been topping out, but it does, I didn't talk about it when we went over the sectors, but it does still have probably the best price setup as far as, you know, it is turning down, but it's still holding up well above its EMAs. EMAs are constructed the right way with the slowest on the bottom, fastest on top. That's not going on here with Devon Energy. It is near some interesting lows. You know, given Energy was doing so well, this one just never really perked up. It never really did anything great. I don't like this stock because I know that there are better ones out there. Notice relative strength is really pulling back here on this one. I'm not a fan. I know Energy is in the process of topping right now and giving us a pause in its magnificent rally. So I'm not a real fan here of this one. I can see buying it on this low right now, but there's not enough good stuff going on the chart for me to enter. And if we look at the weekly, I'm sure the weekly looks decent. Well, no, it doesn't even look decent. The weekly PMO is below its signal line. I think I'd leave this one alone.
Okay. There's a question here. Is the energy sector considered value rather than growth? I don't know the answer to that. I don't think of it.
I think it probably depends on who you talk to. You do find a lot of high yielding stocks in energy. And so to me, that does speak toward value rather than growth. But there's certainly growth stocks with energy. Personally, I would say it's probably more of a value type sector, but that's just my opinion.
Well, I've always ignored value versus growth is because they both can do well versus the other. So I don't I don't know that there's any use in distinguishing.
Right. It seemed in the past, before things got to where they are, that, your consumer staples, those type of value stocks really tended to be in a big, giant trading range. And so very unexciting, but you get into them because they've got the good yield, they're your value stock. But honestly, now I think that you're exactly right, Dad. I mean, their value stocks can travel every bit as quickly as a growth stock. It's just a matter of I don't know, what you're going after. Are you going after yield or not?
Right. Okay. R or para. I'm not sure what that is about.
Okay.
Okay.
That means that he wants both symbols, but he's going to be nice and only ask for ask for the one. If you do like these trading rooms and you do want your symbols always looked at, I would recommend you go and check out DecisionPoint Diamonds, because in Diamonds we have access to an exclusive diamond mine trading room on Fridays where I do have time and I will go through every symbol. So if you want to make sure your symbol gets looked at, consider a subscription to DecisionPoint Diamonds. There's my little mini commercial. Ooh, got it in. All right. Ryder is breaking out. I like this stock. This stock was actually a diamond in the rough last week, I believe. I like the way it's breaking out here. I like the PMO buy signal. I like all of the stuff going on in this chart. Even the group itself is starting to show some outperformance. And this one's already an outperformer within the group. So I think this one has a lot of upside potential here. Let's look at the weekly and then we'll see about a 5-minute, because I do like this one for entry. Nice breakout on the weekly chart. PMO rising, not overbought. Scooter is in the hot zone above 70. That means that it's performing better in the intermediate and long term than 70% of its universe. Its universe being, this is a mid cap, so its universe is mid caps. Like the look. Let's take a look at the 5-minute. Right now we're at a sell point. So there's more than likely an opportunity here to get in at a better price point. So if you are like me and you can be glued to your screen after this trading room, might be worth it to wait for a better buy point. But ultimately, I think that Ryder looks good for a buy.
Okay. MANH.
All righty. Double toppy. One top, two top, Adam, Eve. Nothing really too exciting on this chart for me. I mean, there's a PMO sell signal. RSI is negative. This one looks like it's getting ready to go down and test this support level. I don't think that I'd want to be a buyer here. It's had 2 days of rally and it's not getting above its 50-day EMA. And again, the PMO in decline here. So I'm gonna have to pass on this one.
LLY.
All right. Well, I don't like the indicators here. Relative strength is poor as well. This seems more like a possible shorting candidate than pickup. It is on the 50-day EMA. It is on this level of support, so it does have this opportunity to reverse, but this looks really toppy to me. Knowing there's market weakness, healthcare didn't look all that exciting. I think I would pass on this one as well.
Okay. let's see, TARS.
Okay, whoops. I'm not sure what, oh, TA, I was doing PARS, PA. Oh, really bad day today. PMO is topped, stochastics have topped, relative strength is starting to fail, RSI negative. This is not a good looking chart. I don't think I'd want this one any longer. If I owned it, I'd be ready to get out. There's nothing here to tell me that we're going to get that reversal. It does look like it wants to form a reverse head and shoulders, with that being the head, the left shoulder, but we don't really have a right shoulder. I could certainly move all the way down below this support level. Not a fan, and if I owned it, I'd probably be getting rid of it.
XHB.
All right. I know we're out there and diamonds in the rough. We've been short on home builders, and we are starting to see a little bit of a rally going on here, but notice that it's still below this support level, and the PMO is still in decline. We're having 2 days of rally here. That is a bullish engulfing candlestick, though, so we do have to keep that in mind. But the PMO is still in decline. It's really not decelerating. Stochastics below 20. Really
Definitely
big
need to look at the weekly on this.
Yeah, big rounded top. Yeah, weekly chart showing a PMO crossover sell signal. Weekly RSI is still positive, but this is like I said, this looks like a double top. We're below it. It's confirmed it. I would be expecting lower prices. The scooter isn't really showing the weakness yet. That's kind of interesting to me, but overall, I think this is a pretty weak looking industry group.
That's a long-term double top.
Yes. Right here and here. In fact,
FRO.
why not? Yep. So it's not, obviously it wouldn't be confirmed until we got down here, but it's still a bearish pattern that is overshadowing the weekly chart.
Really,
and
real estate is in a real mess right now. You've got, there's no supply because people don't want to sell. People don't want to buy at these interest rates. And so you've got a shrinking supply. They're not building houses while this mess is going on. Thank you, Fed.
Yeah. Yes.
FRO.
All right. Okay. Marine transportation. PMO buy. I like the relative strength. I like that stochastics are above 80. RSI is overbought, so it does look like it is due for a little bit of a pullback here on this really big rally. But everything going in the right direction. Lower high today, but ultimately, I think this still looks like a pretty good chart. If we go to the weekly, here's a bigger version. Weekly PMO has surged above its signal line, giving us that bottom above the signal line. So that's very positive. And we look at the monthly. Wow, it's been way up there prior. Wow. But looks like it's breaking from this basing pattern. So that's overhead resistance, really long-term overhead resistance right here at those tops. And notice that it is now breaking out above those tops. So I think this one looks pretty good. If we go to a 5-minute candlestick chart, we're not at a buy point really because the PMO is starting to decline. We're at a sell point. And so you probably will get a better buy point if you have time to watch this 5-minute candles.
Is it too late to go long USO?
I would want to do it on a pullback right now. If we look really quickly here at the 1 year, we're pulling back right now. I think that it's going to move a little bit lower, and that might be a time that you could go long. I think that with production the way it is, that everything fundamentally that we're hearing in the news anyway is that prices are going to continue to rise based on production cuts and the US not producing to the degree we have normally produced. So oil prices are going to continue higher, but I think I'd want to wait a little bit longer to get this pullback finished and then pop on in and ride a bit higher.
How about O?
Overstock. Oh no, Realty Income Group. My bad. Yeah, that's OSTK is overstock. Wow, this is pretty ugly. I don't see anything redeeming about this except that the RSI is very oversold, but notice it's still in decline. So it's not even as oversold as it's likely going to get. Ugly chart. I don't see any, there's no support here. Let's go to the weekly. How close are we to longer term? We've broken down below longer term support. This one looks like it's going to head even lower. Weekly PMO in decline. Scooter is only 9.4. This is not a knife I want to catch. I think that we still have lower to go on O.
Okay. Do you know of real estate ETFs that specialize, say, in residential or storage versus commercial office space? I don't know which they are. I'm sure there are those kind of things.
Yeah.
Another viewer says use Google. All sectors you named have specialized REITs, easy to find.
Yeah.
Okay.
Public
For
storage
long-term
is the only one I
investment,
know offhand.
isn't it good to invest in ETFs when they are very cheap? Absolutely. Buy low and sell high. But
Right.
of course, I mean, ETFs, just like stocks, you want them to go up if you're long.
And yeah, support and resistance, Eric mentions under that question is key. I mean, that's really going to tell you the best places to get in and to get out. We've seen some broken support. We've seen some bounces off support. Those are your sell points and your buy points.
Let's see, FCX.
All right, another non-ferrous materials. We looked at, I think it was Frontline, was that? I don't see anything on this chart I really like. It does look like it wants to reverse off this level of pretty strong, well, I won't say reverse off that support. It's dropped below that support level, but it is higher than it was when it opened. I'm not a fan of this chart. The PMO is in decline. RSI is negative. There's really not anything here that excites me. With this chart, I'd be really careful. If I owned it, I'd be hovering over the sell button.
Okay, we've got about a minute left.
All right.
VET.
All right. Another exploration and production. And notice this one looks a little bit better than Devon Energy, right? Because we have at least a rising trend that has continued. Looks like we're reversing off the 50-day EMA. PMO is still in decline, but it is decelerating and stochastics have turned up. Relative strength wise, I think we could do better with relative strength. We could maybe find one that's outperforming instead of traveling in line with the group. It is slowly outperforming the S&P, so I think that's okay. I'm not a real fan here just because of the way the PMO is acting. Certainly watch list worthy because this is an interesting area of support that it does look like it's ready to reverse off of, but I'm just not sure I'd trust this rally yet until that PMO is decelerated a little bit more. If you like what we've been doing here in the trading room, we would recommend you come check out our website, decisionpoint.com. Like I said, for the trader in you, the Decision Point Diamonds is the way to go. That's going to give you 10 stock and ETF picks per week, as well as that live trading room on Fridays. It's an hour and a half, so I definitely get to all of your symbols. We look at the symbols we put up and see if they're doing well or not doing well. It's a great way to learn how to read a chart. All right. And with that, we will wish you good luck and good trading.